Happy end of financial year. The Aussie share market looks set to close this financial year with a gain of about 10%. It's great to see you on this 30th day of June. My name is Jessica Rami, a market strategist here with Mumu. It's great to have your company. Let's just start by having a look at the US share market, where we saw shares there on Friday surge to a brand new record all-time high, perhaps a pre-celebration of their end of quarter in the US, and in Australia, as we said, it's our end of financial year. So let's have a look at the S&P 500, where we saw about 67% of the S&P 500 stocks move up on Friday, seeing this benchmark index close at 6,173 points. That is its highest level in history, a record closing high. What fueled the charge? In the big caps, we saw Nvidia once again rising the most. It rose up 1.8%. It's now at $157.75 US. Nike rose the most out of the stocks in the S&P 500, though, excluding the mega cap gains. Nike, stellar standout performer, rising 15%. Now, this is all despite the Fed's preferred inflation gauge, known as PCE, moving up, showing prices are now rising a little bit more than expected. But what this narrative suggests, with stocks moving to record all-time highs, despite inflation moving up ever so slightly more than Wall Street was expecting, this narrative basically suggests it's clear that investors are unshakably focused on the future. And of course, speaking about the future, we know in the US, investors are pretty hopeful. Lots of good news is going to be ahead. They're hopeful of a trade deal being done, plenty of deals. They're hopeful of taxes being cut and company earnings continuing to grow more than expected. And all this is likely to perhaps fuel markets to new record all-time highs in the second half of the year. Of course, the US is progressing trade deals as well. We saw Trump say that is so indeed with China and the UK. Investors are also hoping for smooth sailing ahead of the July 9 deadline. Of course, July 9 is when America's country-specific tariffs are set to resume. So investors are pretty convinced. All in all, we do have a bullish scenario intact for stocks. Also thinking about the US tax cuts, that spending bill will likely be passed on July 4. So basically, this is why we are seeing investors take profits out of healthcare and potential other stocks that could lose out to the bill. So electric vehicle stocks, such as Tesla and Uber, fell last night, perhaps profit taking there. The other thing to consider is that oil has continued its decline. Oil is now down 12% in 5 days, while gold is also down about 3.2% in 5 days. It is holding, though, kind of around record all-time high territory, $3,261 US an ounce. But you do have to wonder if gold will continue to kind of stay around this ballpark at a time when there are still concerns about rising US government debt levels. Overnight, we heard rumors that the US government deficit is expected to rise $3.3 trillion, that's in US dollars, over the next decade. So that could see gold supported higher here. Meanwhile, we did touch on oil, a very different scenario for oil. Our oil is continuing its decline. Perhaps Warren Buffett's Occidental Petroleum should be on your radar. Green days are days that Occidental Petroleum has moved higher, and red candles, as we can see on the chart, are down days. So when Occidental has closed lower on the day, we can see that Occidental Petroleum is continuing to make lower lows, and the moving average divergence, bit of a technical indicator that we look at as chartists, I guess you could say. This technical indicator is suggesting this stock is pretty exhausted. Buying is now slowing, and there are more sellers in the market than there are buyers, which means Occidental Petroleum could see more selling pressure vis-a-vis. You might expect more down days ahead for Warren Buffett's Occidental Petroleum for his oil stock. Let's move to the Aussie share market. Speaking about spectacular things now, the Aussie share market is expected to close off the financial year with a bang on a high, around record all-time highs, in fact. Around record all-time high territory. As we said, the Aussie market is expected to close up about 10%. As we can see on the screen, we're displaying that the Aussie share market throughout the financial year, remembering that began on the 1st of July last year, and throughout the last 12 months, we've managed to rise 9.85%. So if the market holds around the levels that we closed on Friday, we're about 1.5% away from our highest level in history. And as we can see on the screen, the top quadrant of the screen displays the stocks that have really fueled the market higher. And we can see that the theme is that gold and defense stocks have really lifted the market to record all-time high territory. So the two biggest gainers this year, up about 150% each, Regis Resources and Genesis Minerals, they are both gold stocks. So well done, spectacular triple-digit returns in those. The second other big takeaway is that defense stocks such as Austal are ruling the roost. Austal, the third biggest performer in the Aussie share market this year, up 144%. Obviously, Austal has won more defense contracts such as the AUKUS deal, and they're continuing to win contracts hand over fist, really turning around the narrative that we saw 3 years ago where they were losing contracts. They've now changed management there, and they're continuing to grow their earnings. And of course, earnings growth supports share price growth. Austal should be on your radar. As for the other stocks that are fueling the market higher, we can see the third theme is that technology stocks are dominating the leaderboard as well. A couple of tech names stand out, obviously. Technology One, up 122%. We've also obviously got Zip, the buy now, pay later company, the only buy now, pay later company that's a standalone stock in the ASX 200. It's up 111%. Obviously, Afterpay was taken over, and it's got a position on the ASX via a very different company called Block. What else should be on your radar today? Well, Virgin Australia. Virgin Australia has had a cracking debut. Its shares, they issued shares onto the market at $2.90. So they are still up about 10% if you bought shares pre-IPO, but their shares are now starting to come under perhaps institutional sell-off territory. Perhaps this is something that you should consider. Virgin Australia may potentially see more institutional sell-off, runoff. This typically happens with stocks after they come onto the market. There's usually a flush out period. It can sometimes be several months of institutional selling where people sell some positions that they bought prior to the company going public. So that is something for you to consider. But as we said, today is end of financial year. It's a time when a lot of institutional investors look to take profits from stocks that have done really well over the past 12 months, and they look to top up those stocks that they believe will make a run up in July. Of course, July is one of the strongest throughout history, one of the strongest months for returns. This typically means we see lots of buying into stocks, into specifically the ASX 200, and that's why it's throughout history has been the best month over the last 10, 5, and 20 years. But today being the last day of the financial year, you could expect moves to be exacerbated. Keep an eye on oil stocks. As we said, oil is continuing to decline. Overnight, the oil price lost about 0.9%. So you might be seeing further declines in stocks like Woodside, Santos, and Beach. Meanwhile, you might see some buying perhaps into banks and maybe even tech stocks if we get, I guess, positive news out of private sector credit data today and also inflation expectations. They could really put markets into further upward pressure or downward pressure. It really depends on what the numbers show. Happy financial year. Great to see you. Chat soon.